What's good, guys? Tesla's down another 2% today. And if we were to close this weekly candle as we are right now, it would not be a good sign because we're showing lower lows on the BX trender, which is a confirmation and indication that big money is pulling out. However, the weekly candle is not closed yet. We still have 3 more days of trading, and something that's very important is coming up tomorrow, which is Nvidia's earnings. Basically, Jensen and the team are going to have to put the entire US economy and the market on their back in order to hold big tech up. And I do think that they will do that. I'm going to be doing a separate video talking about that. I'm not buying into the hype. I do not have an Nvidia position. I'm not somebody who's just chasing the top. I will explain why I think that we are going to see a continued rally in Nvidia and the market. But right now we're going to finish with Tesla. So looking at this, if we were to close like this, not a good sign. We need to see price on Tesla bounce this week, at least holding $216 to $220. We need to make sure that the weekly BX trender closes back up here with higher lows, or more preferably higher highs. This will show that the continued strength we saw over the past 3 weeks is going to continue to step in to push price back up to 240, 248, or 260. If that does not occur and we close with lower lows on the BX trender, Tesla will most likely sell back off to 200, 190, and maybe even lows of $188 before a potential bounce. As of now, I'm still holding my December $220 calls. If we close with lower lows this week on the BX trender, I will cut the loss short term on it and look to re-enter again once we find a bottom around 200, 191, or maybe that 188 level within this market bias really. If we move to the daily chart, I want you to understand that if this level's broken, as we said, the next spot that we'll be looking for a bounce is going to be within our golden pocket level. The golden pocket level is going to be the 0.618 to the 0.786. This is the area where institutions usually step in and look to begin to buy. The main area that we would be looking to re-enter at, our most optimal area, would be the 0.826. When market structure is held, the 0.826 is considered our smart money level, and that is the most optimal time to look to go long. That is where they're normally tagging out people's stop losses. If price were to sell back into this level, tagging everyone who got in at 200, setting stops at 192, 195, and 190. And normally they're accumulating options for pennies on the dollar within this level. Sometimes they'll even push it below, and then they'll allow it to fully recover. So that's what I'm expecting to happen if this week closes as we are right now. But I will say, I do think that we're going to get a recovery. I do think there's a very good chance that Tesla will probably close at 216 to 217 this week, highly dependent off of Nvidia, but we have to see what happens from that point. The crappy thing about using indicators, even extremely simple and potent ones that we use, is that it's still lagging information. This is because we need the candles to close in order to get the correct data. But the caveat to that is that in order for us to get the data we need in order to enter, we need it to have already happened. This is why, back when we saw this massive sell-off on Tesla, all of the indicators were telling us not to buy down within this level. They would actually say, no, that price is probably going to continue to sell off. But because we understand market structure, we don't need the indicators within these smart money levels, because real time will know if they're stepping in, because as price is selling off, let's just look at how this candle played out, right? Real time, boom, market session opened at 184. We closed and saw money come in as soon as we ended up hitting that level. We don't need an indicator to tell us that there's buying there. We know that there's buying there. And so the unfortunate aspect of where we are right now with Tesla is that we need to wait for Friday's close in order to see where these lower highs are coming in at, or if we're going to get enough money coming through to continue to push this up. But as I said before, I think that is highly dependent on Nvidia earnings, which I'll be doing a video on. If you guys want to get access to all my indicators, learn exactly how I trade entirely for free, all of our courses are down in the description. We go over technical analysis, everything that you need to know about options trading, my whole 9 years of doing this in all of these courses, and they're all very simple, and most of all, they're free. And if you want to get access to all of my real-time trades, go ahead and check out our private academy. The link is in the description. I'll see you next time.